Thank you for joining us. This is James Rome with Collision Pulse. Today, we are speaking with Cole Strandberg with Focus Investment Banking. He's going to provide his insights through his M&A strategy and investment banking to help grow independent operators, as well as give us his insights on the industry at large. Enjoy the show. Thank you so much for coming on the show today at the Collision Pulse, and we are excited to dive into new topics of the industry and get your professional expertise on how things are going. But before then, thank you so much for coming on again. And how have you been?
Good, man. The pleasure is mine. Thank you for having me. Always a pleasure to connect with you, but things are good, man. Looking forward to diving in.
Awesome. Well, I actually have something we should go over. Now, one of the things that happened the other day is I was thinking about some of the things in the industry going on, and I asked the question, who would know best more than ChatGPT in this age of technology? You know what I mean? Now, where
exactly
this
right.
comes from, who knows, right? But it reads the whole internet and spits out an answer, and I love it. One of the things that I found super interesting, and I know we spoke a little bit about average body shop profitability. Now, in the course of the time together, I mean, I've seen hundreds, if not thousands, of body shops, financials, and profitability markers just because, I work with a ton of them through our software. But my thought is that you find, even though this is a ChatGPT answer, the average net profit of a body shop, you think is 5 to 10% on average for a single store operator. You think that's actually legitimate?
I think so. I think it trends a little bit conservatively. I think that's kind of right in line with your average single store, kind of smaller operator. I think the bigger you get, the higher the ceiling for that percentage margin is. You look at the only publicly traded pure collision play in the world, as far as I'm concerned, is the Boyd Gerber Group. They're going to be a fair bit higher than that, but they're also massive. They have that scale that allows them to bake in some layers, get some real economics, and improve on that. But I think that's a conservative estimate for your average body shop.
Yeah, I mean, 5 to 10%. Now, here's my thought, and I don't know how people feel about this, is that if that's the average, you could put your money into the stock market and get 10% and not do anything for it, right?
Yep, exactly. Exactly right. You could say that about a fair bit, though, and the opportunity for growth and margin improvement certainly there. Interestingly, when we talk about collision repair economics, a lot of friends who have exited or whatever, who have been removed from the game for a little while, kind of look at these numbers and say, yikes. The compelling part too, though, is the multiples upon exit. And so you're making a good return year over year. Where the real money for real collision repair businesses is the light at the end of the tunnel. It's when it comes time to exit, you can go and average those multiples or those profit margins way up year over year.
Right. So for the average independent operator looking to exit, some of these net profit percentages might not be super exciting, but at the end of as you mentioned, at the end of the tunnel, there is going to be a payday.
Right on. Yeah, you're building value in addition to making money every year.
Okay, that makes sense. Now, one of the things I do want to share with you is I do a 20 group myself, and we do a poll of other people. And we have something called a net profit scorecard. And what I found with some of the best operators that I've had the privilege to work with is that they're doing a lot better than the average, because obviously no one really wants to be average. And what we found is that you want to be probably in the 20% range if you're going to be considered like the top 5% of operators in the nation, is really what we've seen. And,
fair to say. And you would know these shops better than I. If I were to look at these net profit margins, my assumption would be they are probably niched down to an extent. They're not going to be your generic DRP store fixing Camrys alongside Escalades alongside whatever. They're going to have their niche. Is that a fair assumption here in this case?
I think you could say that for some of them, absolutely. But you might be surprised. I have some shops that are strictly Geico or some other major DRP carrier, and they're doing very well too. I mean, they're definitely in the 18% range, but then that comes down to efficiency, cycle time, how quickly are you getting things in and out, how effective you are. So really what I'm here to say is that it's possible to run a very profitable business no matter what, I guess, avenue you decide to grow. Now, obviously, in my opinion, if you niche down to something very, hey, I only work on luxury vehicles, yes, you have probably a better opportunity to hit some of these numbers than, taking a bunch. Because like when you start talking about a bunch of discounted work, that means the volume has to really be there for you to really get the ROI.
Yep, absolutely. And look, fixing cars correctly is expensive too. So,
Sure.
there are probably some present company here listed excluded, probably some very profitable operations who just might be cutting corners, profitable operations who are finding their niche and doing it 100% correctly, and profitable operations who are scaled too. The more scale you have, the more margin opportunity you have as well.
Absolutely. And I also found it interesting when we start talking about cycle time and, how that affects your gross and stuff like that. ChatGPT was this talking about 8 to 12 days for some of these operators, 12 being on the high end, 8 being on, the better end. But I was wondering if that was accurate. So I ended up doing a little bit of more research because I felt like 12 is actually a very decent cycle time considering the supply chain issues after COVID.
Sure.
I feel like I've heard numbers like 18 days, 19 days is pretty average across the board. So what better place to find it than the people that have that information?
Well put.
So I took a look at the crash report, and surprisingly, when it talks about vehicle to vehicle into repair started, it's 12 days, takes 15 days to actually get the customer in, which I find wild. I don't really even believe that it takes from an assignment all the way to that customer's dropping off their vehicle to a vehicle end date is 15 days. I feel like that is crazy to me.
That does seem long. The 8 to 12 definitely seemed extremely short. Yeah, I think it's going to be, again, very dependent on what types of vehicles are being repaired, what types of repairs are being done. You're seeing kind of an increase of the presence of these lighter hit specialty centers and then some heavy hit specialty centers. I think the disparity there between those two is going to be significant. But yeah, this is some insightful data.
And one of the things that I want to get at, and the reason that I know most body shop guys are beaten over the head with the term keys to keys, but I also wanted to share with some of the stuff that we look at here at Rome when we start looking at a cycle time number. And that's something called lost man days. Now, lost man days is kind of, think about it as like the inverse number to cycle time. Like, okay, if your cycle time is truly 12 days. And we know, let's pretend that that's a good number and it is achievable. Probably not the average, in my opinion.
Sure.
But let's say you want to improve because there's other shops doing at least 8 days depending on their average and the body of work that they're specializing in. But let's say you're going for volume, you're going for efficiency. What does this actually mean to you? So I'm going to round some numbers off for you. But what this means, if you're a shop doing 100 cars a month and you want to go from 12 days to 10 on your cycle time, what is that costing you? And really, every month that you're at 12 and not 10, you're actually losing 200 man days of production each and every month because you're adding 2 days to every repair you do. Does that make sense?
Absolutely.
So when we start talking about profitability, what's the range? Or some people are thinking, hey, I'm at 5, I'm at 7, how are people at 20? Well, when you think about it, it's like, okay, 12 and 10-day cycle times, we could agree that that's a pretty good number on average. But if you're looking to be the best, all of a sudden you're thinking to yourself, wait a second, I could turn out, or I could almost lose a year's worth of work a month because I am inefficient. And the answer is absolutely you could. And keep in mind, most shops probably aren't even close to 12, right?
Sure.
Like most of them are higher than that.
Yep.
So when we start looking at, hey, are these numbers realistic? How do you get there? But obviously, it's all about process and a number of other little factors here and there with the customer, the insurance carrier, and parts. But people that have figured it out, there's a huge upside for that potential.
Man, and it's an example of how powerful data is. And it's something I appreciate about you and what you guys do and all the shops that you work with. When you can quantify this type of stuff, we can talk about kind of willy-nilly improving operations and efficiencies and things like that. But to really quantify it like that can incentivize real change in a business to make that happen.
Absolutely. And really getting people to see the potential is really the real key there to help them be better operators. The other thing that you could also look at, this is based off a bigger shop doing about 200 repair orders a month, but even when we start talking about cycle time days, that's a big nut to crack. That takes, maybe even a half a year working on process with your people. But think about it, if the average severity is around 4,500 to 4,600, and you were just 2% inaccurate on every estimate, meaning you didn't write $90 that you should have on every ticket, that's going to equate to about 200 grand a year in total sales if you're just 98% accurate in your estimate writing.
Mm.
And that's
Huge,
just 2%.
quantifiable right there. Absolutely. Absolutely.
So everything counts, obviously, in collision, unfortunately, and if you are doing the repair properly, you absolutely should get paid for it, and you should be billing properly as well, because we know that this is going to drastically impact your gross at the end of the year. And yes, this is only $90. Now, the funny thing that I'm going to ask you is that if the national average is around 4,500 for severity, raise your hand if you want to be average. Right? Do you want to
Yep.
be the average shop writing a half-baked estimate with not the right things on it, or you're missing stuff, or you're not billing properly? I mean, that's not great. And I'm sure you've talked to shops where their severity is well over 4,500.
Sure.
Most,
Yeah,
I mean, you
absolutely,
talk
man.
the average of over 6,000 or
You hit
more.
the nail on the head, though. It's if you're doing the job correctly, you're following OE procedures, you're returning a vehicle back to pre-accident condition, you need to be paid appropriately for what you're doing. And it's not even necessarily changing a whole lot about your business other than making sure you're getting that capture for everything that you're doing.
Absolutely. Absolutely. And it's funny you mentioned kind of niching down to like, hey, if you're doing luxury vehicles, you're doing this or that, or maybe you specialize in heavies. I mean, I've heard shops average severity could be 6 to 10 grand per job, depending on what they're working on. You know what I mean?
Absolutely. And I'd even take it a different direction too. When I'm evaluating businesses, I'm caring much more about that bottom line net margin. I want to see around 10%
Right.
or better is the sweet spot. And I've seen some incredible businesses focusing on those lighter hits. So yes, there's opportunity in increasing severity, but if that niche is lighter hits, even some hail play, that can be a great business as well. It's really all about that bottom line.
Yeah, for sure, especially for evaluations.
Yep.
And one of the things that I did also find interesting is that there's more hours on each job traditionally over the last, year or so. So you're getting more hours to fix these vehicles, which is cool. The one thing that I could say about that is not only are you getting more hours, but we have seen an uptick in labor rate increases as well across the board, mainly due to inflation. But that's actually all happening, and I just feel like ever since I've been in a body shop or learned about the collision center, the first thing that typically is talked about is my labor rate should be higher.
Sure. Yep. Absolutely. Well, it's interesting timing too. The last 3, 4 years, coincidentally or not, around COVID, so much of what you and I talk about offline, online, whatever, is going to be about supply and demand. So much of business just comes down to supply and demand. So when shops after COVID had such backlogs where the average, I mean, was crazy. It was a month, 2 months plus saying, hey, we can't take any more business, the insurance companies started getting concerned. There was not enough demand for their work to be able to control that pricing. So as soon as that need went up, you saw labor rates going up, you saw flexibility in labor hours going up, and it's made the industry as a whole more compelling and more attractive with more margin opportunity. Now that'll correct again, and we're already seeing backlogs decreasing and business changing a little bit. But for now, we saw multiple labor rate increases over a short period of time, which has not happened in recent history.
Absolutely. And I think that for shops that are really writing those better estimates are probably seeing the benefits of that on their bottom line as well. of being
Yeah.
able to write better, more complete repairs, getting paid for it. It was really funny. I actually heard a funny story about a shop down in Texas one time, and they were having issues correcting their labor rate. And they had a really funny strategy that actually worked, and it helped them increase their mechanical rate by a good margin. And it was funny because typically what'll happen is if you're asking for more of an insurance company, they're going to just straight up tell you, no, this isn't the market rate. Other shops don't charge that. They have their script that they go through. But what was really funny though was what this one shop did, and they had multiple locations, so they had some muscle behind them, is that every customer that came through the door, they were starting to bypass the adjusters that they were typically working with. So when essentially they would write the sheet and they would put it at the labor rate that they wanted, right? Let's say it was $145 per mechanical hour. And the insurance company was not going to pay that rate, okay? So every time that they would do it, they would explain to the customer of saying, hey, for whatever reason, your insurance company doesn't want to pay it, right? And what they would do is that they would give not the adjuster, they wouldn't have the customer complain to the adjuster, they would actually go above the adjuster to the supervisor. So you can imagine a 6-7 store operation, every customer that came through, the shop explained what was going on and how they're not willing to pay the proper rates, and for whatever reason they're holding back. And you can imagine after about 6 months of that advisor's supervisor, right, the guy above him, getting about 600 to 700 calls a month, eventually called the shop director and said, hey, bud, what's it going to take for me to stop getting these phone calls, right? and they put a change order in and they got their rate raised. It was honestly
Wow.
an incredible experience. But as I mentioned, that requires so much diligence, so much, educating the customer. It requires months of perseverance and bothering this guy. But it is possible if you really want to stick to it.
Man, it's an undertaking, but you're absolutely right. That persistence pays off. A benefit, and you and I talked about this in our pre-show call, of hosting a podcast is you get to speak with, present company excluded, guests that are just brilliant within the industry in so many occasions. And one such guest was a regional leader at a national consolidator who's gone off as an operating partner. He'll be doing his own roll up of body shops. One thing he told me with this changing environment and the decreasing backlogs is, from a single shop perspective, for 2-ish years, they got into the perspective that estimators were sort of taking orders. It was a factory. We need this in, we need this out. Let's go, go, go. And that's a problem for the long and midterm in this industry. They took their eye off of the data figurative ball of, hey, let's maximize these. Let's make sure we're getting the money we need to get, to let's get through this work. Now that that backlog is gone, that work is not there. The need to pivot back has never been greater. And the question mark is, are these shops going to be able to do that and get that culture back to pre-COVID estimating, make sure you're getting your money's worth on each estimate? And that's kind of the big question for single store operators now. One of many, but certainly a big question.
Absolutely. The times are changing. And speaking of which, obviously severity has gone up over the last few years, especially after COVID, mainly because of calibrations, which is a huge market factor because not many people really realize how big this is. I'm hoping the shops that are kind of those forward thinkers are capitalizing on this, because there's definitely a profit opportunity here. But think about your body of work, and if 60 to 85% of your vehicle requires some type of calibration, I mean, there's just too much to ignore at this point. I mean, unless you're working on really old vehicles, which I highly doubt, like older than 12 to 15 years old, I mean, they're going to have some type of system in there that you're going to have to inspect, pre-scan, post-scan, calibrate, and make sure everything's proper. Because at the end of the day, the liability is with the shop. So if that
Sure.
car needed a calibration for an ADAS system, like a blind spot avoidance or something like that, or a backup camera, and you don't, and then that car gets into a fatal accident after the fact, you're going to be held liable for not performing a proper safe repair.
Man, the onslaught coming in the ADAS calibration world is daunting, but it's also absolutely fascinating how much opportunity comes along with that. Even for folks who are outsourcing ADAS calibration, yep, you got to watch the liability, you got to make sure it's being done correctly. There's margin opportunity. For folks who have the facility and the capability to bring it in-house, the margin opportunity is absolutely tremendous. So anytime in this industry where you have these big curveballs that are real challenges, if you look at it a little bit differently, the opportunities there. The recurring theme, though, is the opportunity is there for those who are willing to invest. And it's not an inexpensive thing today to fix a vehicle appropriately. A lot of operators don't have the runway to get that return on their investment. But for those who do, and they kind of see the writing on the wall of what the future looks like, there's never been a better time to be in the collision repair industry.
Absolutely. I mean, I most of my operators, I obviously it requires some space and normally a $50,000 unit to be able to do all calibration unit, all the different types of stuff you could do with a ADAS system. But yeah, I mean, they're averaging $1,500 a day on their calibrations, and it's like you need it for what, an hour a day in the shop. Obviously, you need a flat area, normally 40 by 60 feet if you have a mobile, static target unit. And it's
The
definitely
lighting needs to be right. I mean, there's a lot that goes into it, but man,
oh yeah,
the
yeah.
margin
There's
is awesome.
yeah, for sure. And keep in mind, it's an opportunity, in my opinion, for the younger generation to really get into this that's really tech savvy. Because when you think about it, if you're plugging in a scan tool, you're going through prompts on a tablet. I mean, we're not talking about a guy that's turning wrenches. I mean, if you have a younger guy that's savvy with technology, I mean, that's a career opportunity right there. And it's
100%.
and
100%. And iCar's taking advantage of this. You have now like industry advertising for recruitment of, look at this. This is clean. This
sure,
isn't a dirty job. This is kind of sexy. This is gamified. It's gamer
yeah.
friendly. It's a really cool opportunity. And I think those opportunities are just going to continue to increase. That's an industry that I'm watching very closely. I think it's very early on. And I think it's going to follow the growth just based on need of the collision repair industry. Not quite to that scale, of course, but it's going to follow the general kind of growth, consolidation, growth model that we've seen in collision repair. But the margin opportunity is awesome. I just cannot stress enough. And you mentioned it, the liability, if you don't do it correctly, is immense. So you either need to go all in or stay on the sidelines and make sure you're outsourcing that to a really good vendor.
And keep in mind, even if you are subletting it out, the shop is still ultimately liable. Your sublet
Sure.
vendor would just be standing with you in the courtroom with worst case
Do your
happen.
due diligence. There are plenty of folks out there who are doing it incorrectly. And I think there's a lot of curveballs waiting out here in terms of some government mandates of making ADAS a safety feature. If that happens formally, it's going to change the requirements. Those OE requirements now are no joke. There's a real,
Yeah,
again, recurring theme here, supply and demand issue. There's a lot of need right now for proper calibrations and really not enough calibration providers who are going to do it by OE standards. So some
sure.
opportunity there, some heartburn in the short term, but midterm, long term, really bullish on that space.
Absolutely. And to your point about kind of an emerging kind of almost tech industry for the younger generation to kind of get in and help shops with this as a possible career path. I've even talked with folks like, Ryan Taylor, who, is looking at meta glasses that can identify parts of the vehicle and pull up OE repair procedures. And it's all, in your glasses showing you how to do it, what needs to be done. I mean, and it's all right there for you as you're working on the car. So technology is definitely moving at a very rapid rate.
Man, and you've sort of knocked on the door of the top two technology topics that I come up on, and that's ADAS and it's AI, it's Chat GPT, it's
Yeah,
meta glasses, it's what is that going to look like? And of
sure.
course, we're in an industry that's never going to be replaced by AI, but AI
No.
can make a very big impact on our level of productivity and efficiency if we know how to kind of harness that and use it.
Absolutely. And getting to that when it comes to labor rates, and we talked a little bit about it, they do have a spread on what that looks like. Average repair hours is obviously around 27. This is also increasing year over year, which is also nice to see. And it looks like 65 is kind of the average, and then it also goes across the board. But it's cool to see this because I feel like, as you mentioned, very rarely in the industry's time have we seen any type of real increase, but it's definitely worth taking a look at and seeing what the supply and demand is causing that. Because as you mentioned, once that imbalance comes back to equilibrium, all of a sudden you got to pivot again.
Yep, exactly right. And so far, all of the charts that you've brought up show some very positive trends in the industry. I have a suspicion we're going to see some maybe more red flags coming up here, but I'd love your input on this because I think we both started in the industry around the same time. Our dads go way, way back, long before we were in our professional
Yeah,
careers, which is fun and full circle. But I look back to 2015, 2016. There was a negative cloud over the collision repair industry from
sure.
my perspective. It felt like, man, all these new technologies are coming in. We're going to have self-driving cars in no time, no more accidents. It's really collision's going to be the first automotive subsector to be disrupted in a negative way for collision repairers. Now, fast forward to today, the positivity in this industry is phenomenal. The whole mindset has shifted to saying, hey, collision is going to be one of those few evergreen subsectors of the automotive aftermarket. And I believe that to be the case. I think the runway is incredible. What are your thoughts of kind of the whole mindset shift over the last decade or so?
Yeah, I mean, I think it's going to come down to obviously the big shift was in 2019 with COVID. And what did the government mandate as the kind of essential workers and non-essential? And automotive obviously got into that essential category. And people are starting to really sink their teeth into the technology of self-driving cars. There's really 5 levels of automation, and we're at essentially level 2. And it still might be 15, 20 years before we have completely autonomous vehicles. And then on top of that, the entire road system would have to be redone for it to be completely autonomous. So
And
I feel like,
everyone would have to adopt it. Yeah.
yeah, and everyone would have to adopt it 100%, which it's just not realistic when you really start to think about it. And I know there's obviously people aren't, I feel like having as many DUIs and there's a lot of stiff penalties nowadays for that kind of stuff. And normally it's now shifting to driving while distracted. So you're on your phone, and even if your car is somewhat automated in some form or fashion, will give you a beep if you're coming up on something quick.
Yeah.
There's cars are still going to crash. Even people backing into something that is a stationary object or whatever it may be, having to fix these vehicles will, I think, never go away. And as you mentioned, you're going to have techs to do that. So there's always going to be a supply and demand there of cars that need to be fixed, people that need to fix them. And I think once COVID happened, people started to realize how important one of these sectors are for number one, for cash flow, opportunity for growth. And then obviously, if you're fueled by insurance, I mean, you almost have a built-in lead system, which is 9 times out of 10, the hardest thing to get is, hey, how do I get a new customer? But when you have someone like the arms of the insurance carrier sending you work, for lack of a better term, it makes that so much easier. So it actually makes a really good business model and business sense. And I think that's why people are looking at it more and more, especially with all the new cool emerging technology. And especially with this generational shift where the baby boomers are obviously retiring. I know I used to go into shops where every guy in there was over 55, and
Yeah.
that's really no longer the case. So it's really exciting to see that shift and then that turn to say, hey, this industry is going to be here to stay.
Could not agree more. Well put, my friend.
And the other thing I was going to bring up is I talked a little bit about the average pay. Obviously, this is another hot topic. I really just like that. I feel most shops are at a flat rate model from what I've seen. And I know sometimes those numbers aren't exactly to see where the tech wants it, right? But at the same time, if you have the opportunity to turn hours in a flat rate commission schedule, I know plenty of technicians that are well into the 6 figures because of their productivity, because of their skill, and that's essentially irreplaceable. And then once you get to that level, any body shop worth its salt would treat you like gold to have you. So essentially, you have a permanent job, if you're worth your salt, to go anywhere and make decent money as well. So I think that, is it where it should be? No, but there's definitely a great opportunity to make a ton of money on this side. But as you mentioned earlier in our conversation, if you're at a dinner party and you're talking to a bunch of guys and it's like, hey, I'm a lawyer, hey, I'm a mortgage broker, hey, I'm a body man, doesn't sound that great, right?
Right, right. It's such a great career too, and it's something as my relationship with groups like iCar and CREF have continued to grow. To hear about the opportunities and how you think about career mapping and career progression for young people entering the industry, you can get on a path that leads to that, or you can get on a path that leads to that with three or four different branches that you could pursue. The growth of these national consolidators, you look at folks who are managing hundreds of millions of dollars on a P&L who started in the body shop. And the
Yeah,
career opportunities, whether it's entrepreneurial or otherwise, are phenomenal for people with the right mindset and who have that skill set and who are willing to really learn the trade before moving on to somewhere different within the industry.
absolutely. And I think it's awesome getting that excitement. There's plenty of people out there, job fairs. I'm hoping more schools can fund the trade stuff. I mean, there's definitely opportunity. And keep in mind, shops can play their part by donating things to help those programs. Obviously, I know there's a few programs out there that, every semester, the head guy there gets 50 phone calls from all the shops in the area saying, "Hey, do you have any new people for us?" Right? And,
Yep.
and obviously, it's a give and take in that
Sure.
scenario.
Yeah,
Um,
help the schools, they'll help you. It seems like at a very high level, Gen Zs are more compelled to look into the trades than millennials and previous generations, which is a great thing. Now the issue at a high level that I'm keeping an eye on in trade schools are from an instructor standpoint. When you have the people you want teaching the next generation being able to make six figures in the shop, it's going to be very challenging to get them into the classroom to kind of put back what they were given by the industry, put that into the next generation. But plenty are doing it. We just need to keep that pipeline of good instructors alive.
Absolutely. And then giving back is important to get that runway going. The other thing that I found really interesting was just kind of the overall volume of opportunity, like how many shops are there? And the interesting thing was is first when I looked this up, I was like, I feel like it should be more, like, across the country. And so I put in a different date, and yes, there were more at one point, and some would say it's even over 50,000, depending on what you label as like a body shop, because there's still plenty of, hey, I work out of my garage, and it's technically a body shop, and it's attached to my home. There's plenty of shops like that that really normally don't come up in that traditional, what's your premium shop market. But there's definitely been a shrinkage of that, partly because of consolidation, but and people selling off. But I feel like the smaller operators are now just kind of getting pushed out with some of the requirements that they need to be adhered to really run these businesses with equipment they need to buy, or states qualifications they need to have. I feel like that smaller mom and pop shop are really going away in lieu of all the new things and new technologies coming out, because they can't really afford to reinvest in some of this equipment into new technology in the shop with a 3-man or a 3-bay operation. You know what I mean?
Absolutely, man. Fixing a vehicle today is entirely different than fixing a vehicle 20 or even 10 years ago. It's expensive. You need the right equipment. You need these certifications. You need the trained technicians. It's tough. It's changing the equation. And so I think that attrition that we're seeing over the last 5, 6, 7 years is spot on. I think you're seeing a funnel where we've lost even more than that 10-ish thousand shops. We've probably lost 15, but we've seen the big consolidators, new entrants into the marketplace, private equity groups, things like that, adding greenfields and brownfields and kind of keeping it at that 30-ish thousand level. My data would suggest that we probably have about 18,000 real shops operating in the market today. Real meaning multiple technicians, DRPs, OEs, anything along that line.
Yeah,
About 18,000 like addressable, really good operators.
that's
And
not
I,
a
I think
lot.
we'll see. No, it's not. I think we're seeing those increase. I think that subsector is moving upward. I think we'll see the total number of body shops continue to decrease. We talk about the investment required, the willingness to invest. If you're in the last year or two of your career as a small business owner, you don't have an asset that's sellable. You got one or two guys out there working with you. That's going to be a sunset. That's going to be another one kind of taken off the list. Replacing that though, you have The groups there that you listed, the Calibers and the Gerbers and the Classics, these guys are growing via acquisition, which in theory should keep that line flat, but they're also growing via greenfield and brownfields. And so they're doing their part to keep that number increasing. We're just going to see more shops dropping off than we are going to see being added. The
Yeah.
the speaking circuit that I'm on, and I don't know when this will air, but I know SEMA's coming up. Fortunate to give a little TED talk at SCRS outside of SEMA this year, and my whole premise is the one controversial statement I have in my repertoire. I'm not a controversial person. It does not help benefit business. It does not benefit my business to be controversial. But
Yeah.
I'm saying, and I believe this, the era of the single store independent body shop, generalist body shop is coming to an end. And that's not a bad thing. We're seeing these guys who don't have that ROI calculation worked out in their mind to invest in this new equipment, invest in this new training, where it
Right.
doesn't make sense to do. But the options are the M&A market is extremely ripe. You can sell. The options are further, the M&A market's extremely right. You can buy and grow via acquisition or greenfielding and brownfielding, or you can specialize. And I think all of those options offer some really unique positives depending on where one is in their career.
Absolutely. And I do see the consolidation continuing. And obviously, the larger consolidators are just going to get bigger. I feel like eventually they're just going to take over that DRP insurance market, and all those types of jobs will go to them. And then obviously, if you've niched to somewhere else in the market in collision, that's where really you're going to find your stride of whatever that may be. Because typically these consolidators don't like heavy hits. I mean, they don't want to get dinged for their CSI. They don't want to get dinged for their cycle time. So they're not taking these big, heavy non-drive jobs very often, or they just don't want them, right?
Sure.
Because that'll affect their relationship with their carriers. So there's definitely opportunity, but it's not going to be like it was, back in the day, right?
Sure, absolutely. And I do believe there's always going to be opportunity for the up and coming MSOs and the up and coming consolidators. The theme continues of supply and demand. There's 100 plus, being conservative, private equity groups who are not in the collision repair industry, but they would like to be. The problem is there's about 50 platform level groups that these private equity groups could invest in that kind of hits their EBITDA requirements, their
Right.
revenue requirements. So a real supply and demand issue. And a lot of these groups who have resolved that, hey, we're not going to get one of these. The opportunities are few and far between. The valuations are higher than what we're willing to pay. They're going the operating partner route where they go and take an executive from an existing consolidator and say, hey, you're the CEO. Let's grow this thing via onesie and twosie acquisitions, and we'll greenfield and brownfield. And I think that is a model that's going to continue to increase in occurrence, and I'm bullish on it.
Yeah, I mean, and I see it happening every day. And I work with directors that they say, "Hey, I've been approached by PE guys, and they want me to grow this thing. They want to acquire more." And I feel like you're either growing the business or you're selling the business. So there's I feel like there's those two avenues. I mean, if you're staying stagnant, I mean, your days are numbered, right?
Man, absolutely. And even with younger CEOs and collision MSO owners, the conversation has flipped from selling to, hey, we don't view private equity as selling necessarily. We view this as a partnership and pouring some rocket fuel on what we already have going on. And so the question that I keep kind of coming back to is, do I want to own 100% of a grape or 30% of a watermelon? And a lot of people are kind of weighing those options and deciding, hey, watermelon sounds pretty good.
Sign me up. Sign me up. I heard that. And as you mentioned, those opportunities are few and far between. I mean, here are some of the data for some of the OEM certified shops. I know there's a big push for it, and obviously, I think there's no one that would disagree. You should repair the car correctly based on the manufacturer repair procedures. But it's like, how many shops go all the way for these certifications? And if there's 20,000 solid body shops out there, only 5 to 6,000 ish really have that certification. I think what an interesting play could be, though, and from what I've heard from some of the higher up people in the market, is that the OEs are actually trying to aggressively grow this number one. But number two, Cole, this is going to be, one to cook your noodle. What if the DRP market actually dies because of this? And what I mean by that is that the OEs know, it's a statistical fact, that if you bought a Honda, you went to Tom, Dick, and Harry's chop shop, it got fixed incorrectly, and you had to go back, you had to, there's a comeback, whatever. The next car you buy is not a Honda.
Mm-hmm.
So they know that that's a problem. And keep in mind, these OEs are extremely smart. These people have been in business for literally 100 years or more. So they know the data. They're smart people. And what's going to happen is that they're going to say, okay, well, how do we get these customers from not changing brands? Well, if they sold their own insurance, that means they could then direct the car to a certified shop to get the car fixed correctly and then stay within the brand. Thus, the insurance carriers don't have an opportunity to direct that car anywhere. Obviously, they want to do it to a DRP shop and pay a discounted rate, which we all totally understand how that works. But what if the OEs made a play that said, you know what, we're not going to let this vehicle just go over to some other guy and let them direct where this car goes when it's really not in the best interest of the customer anyway?
Man, a lot of moving parts there for sure. On one hand, I'd argue you have supply, demand. There's still going to be plenty that are not under that umbrella of the OE insurance programs. Therefore, the DRPs are going to offer more compelling rates to keep shops on DRP programs. Where would eliminate that issue, and it's sort of from the Mike Anderson school of thought, not an original idea. He preaches of a future of automotive subscriptions where the owner, it's not even a right to repair issue because they don't own the car. BMW, for example, owns the car. And so they get the 100% ultimate decision of where to send. I think that is a realistic future. And if someone like Mike believes it, I certainly am not too smart to disagree. So I do think we're going to see these OE certified shops increasing in number. There's just a really good PR push to say, hey, OE is the way to go. And it's even butting heads with DRPs, even though I think most of the successful operators you and I both work with are going to say there's a happy marriage for right now to be able to
Sure.
work with both.
Sure. And keep in mind, I know some shops really do like to go after these insurance companies and nickel and dime them for everything, which is fine. But typically, if you do that enough to an insurance carrier, they'll stop giving you the $10 bills, but you'll keep the nickel and dimes. It just depends on how you treat that partner and how they treat you. I think there is a place for them, but obviously, you kind of want to just work with the best of them and kick the other ones out if they're too much of a headache for you.
No, absolutely right, man. It's again another benefit of getting to speak with smart people like Mike. I think there's a lot of we've seen a lot of evolution and change in our industry in the last decade, even the last 5 years. I think the next decade's going to even put that to shame with some of the marketplace evolution, the technological evolution. It's not going to slow down.
Sure, sure. And the other thing I did want to at least speak about briefly, because we've been talking about some of the things going on in the industry and cycle times and profitability. One of the things I do want to hang a carrot out, and you kind of mentioned this earlier in the conversation about our writers, our advisors should not be order takers, right? They
Yep.
should be much, I mean, they are salespeople. They are selling the job that they are going to fix this car properly. They're going to get your life back in order and get you back on the road. Because typically, if you end up at a body shop, it's normally not for a good reason. So that being said, being able to build in, upsells in the sales process to give yourself a lift, and this is really, and you can do this a number of different ways. Obviously, there's the prior damage route. And stuff like that. But there are so many interesting ideas you can kind of just like plug into this. And the funny thing is you just have to ask. And it's like, imagine making 10, if not 20% more in sales a month just by asking those questions and really having that process built in with your estimators to really be able to sell the job and then obviously sell the upsell, right?
Yep.
And one of my favorite ones that I've come across working with shops is that I remember I was at this actually a very large luxury dealer, and obviously this will work with some people and not everyone. So there's definitely a place for it. But they were asking me like, hey, would you pay a little extra to get TSA pre-check or clear if you're going through the airport a lot? It's like, well, yeah. I mean, I don't want to wait in security line, maybe miss my flight. Or, hey, would you pay a little extra to get through maybe some lines at Disney World with your family and you're not sitting around for 2, 3 hours, in a line for a 3-minute ride? Yeah, that sounds reasonable. Like I would pay for that. And then they asked me, would you pay a little extra to get your car back faster so you can get back on the road? It's like, yeah, I think I would. And
Yep,
they're
pretty
like,
clear.
well, lo and behold, we have a program called the VIP Fast Pass, also known as a quick lane in service, but it's just meant for the body shop. And what they actually had a document laid out. Essentially, what it said was, parts permitting, we're going to have techs come in early and stay late and work on your vehicle if you pay for 10% extra on the repair. So they would ask for, whatever the repair was. Let's say it was a $5,000 job. Hey, if you want to enroll into this service to get your car back faster, it's an extra $500 or maybe 250, depending on your market, right? It just, the guy driving the Corolla, the guy driving the G-Wagon, vastly different customers.
Sure.
But the idea is you're asking, and on the back end, what you actually do is you get with your techs and say, hey, who wants to hustle and make more money? I'll pay you, $5 extra an hour to come in early and stay late to work on these vehicles. So you are providing a service for that customer, obviously giving them the caveat of parts permitting, and you get to make more money off it just because you asked.
Sure, absolutely. And stuff like that and stuff listed here with additional cosmetic repairs, some maintenance things, anything that you catch that the consumer may not have, you're offering this as an option as almost a consultant, but it adds to your top line and bottom line. A lot of these are very profitable, but there's very few opportunities, and all of these check the box that they're going to thank you for letting you take more of their money because you've paid attention, you've seen, you've done a value add where, hey, instead of 2 stops, it's now 1. And just finding these things and making extra money is actually going to increase customer satisfaction, which is a wild side effect, but it's a win-win for everybody involved.
Yeah, and I totally appreciate that because I know a lot of people are still going to, like, let's say your policy only covers a certain amount of aftermarket parts, or your DRP makes you use a certain amount of aftermarket parts, and it's not OE. Always having the option, they typically call it either a copay or a short pay form, where it's saying, hey, if you don't want aftermarket parts on your brand new BMW, you can opt for OE parts, but customer would be responsible for that difference.
Sure.
And I think at least having that option for them is huge. And then if you're, good at presenting that, saying, hey, we want to make sure this car is fixed as best as it can to be safe for your family, all that stuff, the customer really does appreciate, right? If you're going to do right by them, yes, you're going to be making a profit off it. But if that's what should be happening anyway, I mean, you should put that into your process.
Absolutely. Again, a win-win as long as you do approach it in a consultative way and not that slimy kind of stereotypical used car salesman where you're
Yeah.
trying to get one over them. It's a great value add.
Absolutely. And one of the things, I know we talked a little bit about that backlog coming down and down and down. I find that really interesting that that's happening. Obviously, we saw it coming because obviously eventually all the cars piled up. We got through them, and then there wasn't a backlog anymore. And the data obviously shows that. But one thing I did want to give some of our listeners here today is one really cool tip when it comes to scheduling, because at this point, sometimes people are fighting for jobs. Some people are, trying to get as many cars as they can. But if you're kind of in that in-between state where, you have some appointments on the calendar, maybe 2 on Monday or, maybe even 10 on Monday. But if you're not at capacity for some of these appointments, one of the big trends that I've been seeing is people being a lot more proactive with it. And we saw on that other chart, it could take much as 15 to 20 days to get a customer actually from the time an assignment is set or sent to the shop. How long does it take that person to get a date in to say, hey, I'm going to bring my car? And that is a 15-day window, which is a huge window, right? In all honesty. So one of the things we're advocating for shops to do is, depending on how your scheduling is going, and if you do have room to put in more cars, meaning, let's say people aren't showing up for appointments or your calendar isn't as full as it could be, to really pack it even tighter to make sure that you're getting, every single item that you could. is it's a new concept called appointment pulling. Now, typically this is used in the service department or maybe even the sales department in some situations. But what that says is I know very few estimators will kind of go back through their appointments once they set it. They're just saying, hey, it's for Tuesday at 3 o'clock. That's what it is. And I'm just going to leave it there. They might even go do a follow up to say, hey, are you actually going to show up? Which would be what a good estimator does. But what I would say, if you have room in the schedule, look at your entire week and then start calling those people that are Friday, Thursday, Wednesday. Call them and really ask them, hey, Mrs. Smith, something wild happened today and my schedule is freeing up. And I know we have an appointment set on Thursday at 4 o'clock, but if you could come in today at 1, I just had a cancellation, and if you could make it in, we could get this squared away for you so much faster if you have time. And when you do that, you're taking an appointment that was on Thursday, bringing it to now Monday afternoon. So you're securing that appointment. There's, obviously you're confirming it, but then you're also freeing up that Thursday to book even more. If, let's say, a walk-in happens or there's additional things going on in the shop that you would have more time freed up, that's just giving you more sales time on the following day or later in the week when you start pulling them and stacking them closer and closer Monday, Tuesday, Wednesday. It's something that at the end of the month, you'll find you've seen a lot more people doing this than if you hadn't.
Man, we talk about the benefit of having a podcast and a forum like this to talk to some really good industry experts. It's been the most rewarding part of hosting the Collision Vision on my end. But a close second is bringing good business minds from outside of the industry to talk about some business ideas that could be applicable within that collision repair frame of mind. And stuff like this is one such example where, hey, it's just good business. It's not the way we might have always done it here in collision, but we can now take from outside of the industry and plug in some best practices that are only not being done because they've never been done in our industry. But just like with jobs, we're competing with the Amazons of the world. With customers, we're competing for customer satisfaction with the Amazons of the world. We need to be able to adjust and kind of take some best practices from outside of our immediate hemisphere.
Absolutely. And that's really me having the privilege to talk with so many incredible operators and what are the best of the best doing. My job is to really consolidate that information and present it in such a way that, hey, this is what other successful shops are doing. Why don't you give it a shot? And really it's about, hey, let's put in one new thing, because obviously change is hard. Nobody likes change. So let's try one new thing this month, and next month we'll follow up on that thing. And if you said, hey, we got this down, our people are rack and stacking all of our appointments, and we're churning out more cars than ever before, it's like, okay, well, let's go to the next thing, right? And let's add in some more upsells. Let's do this. So there's always room to grow. It's just where do you want to focus your time and how do you approach actually implementing and executing all those different items?
Yep, absolutely. Prioritize and execute. That's it. But if you said it before, if you're standing still, you're dying. And that's related to growth, but it's also related to processes. If you can improve your business 1% every day, man, that leads to a very significant impact in just a month, in 6 months, in a year. Certainly, it'll be mind-blowing.
Absolutely. Well, thank you so much for stopping by. I really do appreciate all the stuff you're doing in the industry, and it's so cool to reconnect and to be able to do this. I'm hoping to bump into one of these trade shows one of these days, and we can get together and have some fun.
Hey, we'll make it happen. James, really appreciate you having me, my friend. Keep up the good work, and we'll definitely stay in touch.
Hey, man, you have a great day. See ya.
See ya.